All right, well, we mentioned gold is very much in focus, this due to the non-farm payrolls, all of the trade uncertainty caused by the tariffs as well. So what is the outlook for the precious metal? Let's ask Bas Kooijman, DHF Capital, who joins us now. Bas, obviously continuing to be a lot of focus here in gold. What is the implications of the, I guess, certainty now of what some of these tariff rates are going to be?
Yeah, good morning. It's been a very interesting week for gold. In general, we see gold ranging since half of April already. A lot of volatility on a day-to-day basis, but the market has been stagnant around this 3,200, 3,500 mark. And this week was particularly interesting. A lot of news on Wednesday. We see positive news in the US economy. Gold negatively being impacted on a stronger dollar. Then, of course, no Fed rate cut yesterday, which was expected, but still has that short-term impact on gold rising back. And now the non-farm payroll today. So tariffs, inflation, and everything that is happening in the markets currently have on one side a lot of effect on gold on a daily basis, but on the other side, we are really ranging since half of April.
So, Bas, are you expecting that consolidation to continue? And what would be a potential catalyst to see the gold price break out again?
We saw gold, of course, break out seriously in moments of geopolitical tension. So over the last, let's say, even 2-3 years, these are being the biggest spikes for gold. At this moment, it is ranging, and I would earlier see a little bit more consolidation or even a little bit of a correction of 1 to 2% on the downside before we would, on the long time range, still be growing with the gold value.
So in terms of, I guess, the longer term outlook, it's certainly very much still being seen as a key store of value. What do you see more broadly for demand for safe haven assets?
It's very interesting. We went from 2,500 to 3,500 in such a short period of time, being over 35% up year on year. But the road from 3,500 to 4,000, as some expect to hit already in December or maybe in summer next year, will be a way slower road for gold to grow. I do believe that this kind of numbers are able to be reached depending on the global tensions as mostly the core driver. Of course, a lot of central banks have added to their reserve over 700 metric tons in Q1. And we basically see that stable level at this moment. It will be hard for gold to drop below the 3,000 again.
So what do you think those central banks are likely to do from here, given the likes, particularly in China, where you have seen them add significantly to their reserves?
Yeah, absolutely. And that gives a very strong support level for gold, as long as they do not change their behavior, still buying more in the Q2 as well, and predicted to do more. So both from the Europe side, from Asia, we do see very strong support levels when central banks add that much gold to their reserves.